Okay, good afternoon. This is the online tutorial class on Unit 8, and I will focus on the question 1 and 3 to discuss on the answer. Okay, question 1 is about the profit tax computation of a T-Force watch limited, which is a watch manufacturer in Hong Kong. Okay, it gives you the information, and for the profit tax computations, you should assume that you are the assessor, and we will start with the net assessable profit to adjust it and to find out the assessable profit amount of this GeForce Watch Limited. Okay, now we will go through each of the item one by one before we start to work out the answer. The question mentioned about the company have profit on coded share in related to this $200,000. Okay, now we look at each of that one by one. Okay, the first one is about this coded share. As we all know that about this security trading, in order to determine the source of the localities, according to the DIPN 21, we are based on where is the security is being traded. Okay, and that's why for the first one on the Hong Kong's coded share, and that's why that is the profit on the Hong Kong trading share securities. That's why this is taxable. That's why we no need to adjust any of this item. Okay, and the second one that is the on the overseas coded share, and that will be a not trade in Hong Kong, and that's why for this item, surely this will be adjust. That should be exclude. Okay, exclude, and we should deduct this $80,000. Okay, the second item that will be about the interest income. And among these two items, basically the whole amount should be adjusted, should be exclude. And for the first one, that is because of the interest exemption order. The interest is out of a Hong Kong deposit. That's why that should be exempt. And the other one, because that is from the overseas, and the deposit is being put in the Korean bank. And that's why this $40,000 should be offshore, okay, should also be excluded. That's why the whole amount, $110,000 should be excluded. Okay, the third one, that will be about the dividend received. For this item, there are two, but no matter how, for dividend, okay, because of the section 26A, and that should be excluded. And there was no capital gain tax in Hong Kong also. That's why both of this item should be excluded. $200,000 should be excluded. Okay, the last one will be related to the rental income. And by looking at that, will based on the property location. And as it is located in Macau, and that's why this amount, the rental income, should be excluded also. Okay, that's why we should exclude all this item. And then now we will look at those expenses. Okay, for the first item is related to the bad debt. Okay, and for the first one, that is about the loan to a director who later resigned and was untraceable. Okay, and according to the ordinance, that will not be allowed to deduct. Okay, not allowed to deduct. Then that amount should be added back. And then about the provision for bad debt, by looking at the information given, and there is a decrease of the general provision amount. Okay, because of that, that should be minus. Okay, as I already mentioned, if there is a decrease, you minus. If there is an increase, you add back. Okay, okay, that's why for the general provision for bad debt, this $30,000 should be minus. And then for the specific one, okay, for the specific one, we no need to adjust any on that item, okay, because that is a specific one. That means that can be traced to a particular debtors, and that's why this item no need to adjust any. Okay, and then the trade debt previously included as a sale receipt in account. Okay, and that's why this is correct, and the tax treatments is no problem, and that's why the accounting treatment is no problem. That's why this 25,000 we no need to adjust any. Okay. Okay, then the commission, about the commission. Okay, by looking at this one, we can find that there are two items. One is paid to an identified overseas resident for introducing client. Okay, that's why this is allowed to deduct. But for the second one, because that uh, agent is not disclosed, unknown, and that's why this 110,000 will not be allowed to deduct any, and we should add back this 110,000. Okay, then another item is about the donation. Okay, for donation, we need to add back those amount first, and then after we have add up all the accessible income, then we work out the maximum 35%, and to compare with these figures whether there is over or not, and also limit to those actual cash donation only. Okay, that's why whole amount will be add back first. Okay, then number eight. Number is eight is exchange loss. The loss is arise from the convert of the fixed U.S. deposit into Hong Kong upon the maturities. And for this one, and you will find that there is about the deposit. Okay, originally you will find that the interest from deposit is not taxable, and also for exchange loss. Okay, for this one, and that will also be not allowed to deduct any. Okay, that's why this will be add back. Okay, because that is from a deposit, and that is a fixed deposit, and that is related to a balance sheet item, and that's why for this item is not allowed to deduct any, and you should add back this exchange loss. And then interest expenses. Now, interest expenses is more complicated, usually related to the concerning requirement, basic deduction sections, the specific six condition sections, and then the free extended section. Okay, security loan test and interest fallback test, all those things you should discuss. Okay, now look at this interest expenses, and there are two. Pay on the bank loan, which is secured partly against a deposit made with the bank by the wife of the company director who has no business activity in Hong Kong. Now, by looking at this one, you'll find that being secured by a connected person, because that is from a director wife, and also this wife doesn't have any business activity in Hong Kong. Okay, and that's why most likely when she received the interest should be tax free, and because of that, the amount, just 150,000 will not be allowed to deduct, not allowed to deduct, and that is because of this doesn't fulfill the section 16A. Okay, that is being secured by a connected person by a deposit. Okay, and then the second item, pay on a bank overdraft, which is secured by the company property. Now that is fulfilled, and that is financial institution, and also secured by the company properties, not by a deposit. It also satisfy the secured loan test, section 16A. And because of that, this no problem. We no need to adjust these figures. Okay, number 10, about the legal free. There are four items. Okay, and for the first item, that is not allowed to deduct because that is about the dispute between the Inland Revenue Department, and this 80,000 legal expenses not allowed to deduct, so be add back. And for the collection of the trade debt, that is related to your normal business, no need to adjust any. And for the collection of the loan to a director, and for this item, because originally that is not allowed to lend any money to the director if it become bad debt, right? And that's why the concerning legal free also not allowed to deduct any. That's why we need to add back this $21,000 only. Also, okay, for the formation of a new subsidiary. Now, for the formation of the new subsidiary, basically that is capital in nature, and that's why this figure 25,000 is not allowed to deduct. You should add back. And for renewal, then that will be a normal expenses that will be allowed to deduct. That is the great difference between that treatments. Okay, then we look at 11. According to this one, and you will find that there are two legal other expenses. Okay, for the first one is about the penalty. Okay, penalty, and that will not be allowed to deduct. Okay, and other than that is the fine for breaking the labor ordinance, and that's why this also not allowed to deduct. The whole amount, 33,000, should be added back. Okay, and then about the salary. Number 12, including in the salary an amount of 1 million lent to the director as a loan for his personal use. Now, this is not a financial institution, and that's why these figures is not allowed to deduct. It's not a salary, and also that is not allowed to deduct. Okay, that's why we need to add back this 1 million. And other than that, there are $200,000 salary tax paid on behalf of some of the employee who have to pay for the PRC tax. Okay, and this $200,000 is no problem because there is a fringe benefit provided to the employee, and this no need to adjust any. And then 13, solvency payment, and there is no need to adjust any. Okay, and then 14 is about the statutory depreciation amount. That is the figure allowed to deduct. Depreciation, statutory depreciation. Okay, now after we have discussed all of that, by looking at the answer. Now, remember to write down the company name on top and the year of assessment and the base period. Okay, you should write down clearly. And then start with the final figure of the income statement provided by the company is 1,901,500. Okay, then we will exclude those non-accessible income that we have already discussed. Okay, then we will add back those not allowed deductible expenses. Those things we have already discussed. Okay, then by looking at that, finally, the adjusted accessible profit will be 3.6 million. Okay, then we will deduct the statutory depreciation. Okay, statutory depreciation should be allowed to deduct, but for this one, okay, that is the accountant, okay, the calculated approach, and that's why you need to add back first. Okay, after we have adjust this statutory depreciation allowance, and then we can determine the maximum of the charitable donation. You better to show the maximum, okay, right here, about the 3,036,000 times 35%. Okay, the maximum should be 1,062,600. Okay, and that will be the maximum. Okay, as that is not over, and also we will just allow to deduct the actual cash donation. Okay, that's why one and only one item among the donation, just 150,000, not more than the maximum. You deduct these figures. Okay, finally we can work out the accessible profit, 2,886,000, and then 16.5% standard rate, and the company will be required to pay 47,690. Okay, and also the question asking through to calculate the provisional tax as that is being specified. Okay, that's why we will assume next year the company will have the same amount of the accessible profit as the preceding year, and that's why we are using the same figure to time another figures, and that's why that will be the provisional profit tax for the another years. The company are required to pay in advance. Okay, then the second question that will be related to question. There are something that you are required to explain. I have already explained to you all. Okay, that is about the overseas quota share. It's about mention about the DIPN 21 about the locality of the source, and other than that about the interest deposits, and you should discuss whether that is not taxable, okay, and because of the offshore income and also the 1998 interest exemption order, and then the dividend, we have the section mentioned about, and the rental income are also related to the DIPN 21, that is based on the physical location of the properties. Okay, and then we'll go to the question 3 about the partnership. Okay, partnership computation of the profit tax, and it give you the information about the income statement of the partnership, but we need to adjust first, right? File the accessible profit, and you'll find that for this question mentioned about one of the partner leave and the other partner join the company. Okay, that's with Mr. Ao will leave, and then joined by another partner, that will be Andy. Okay, and then the sharing ratio of the profit and loss, that will be the same, 1 to 2 to 2. Also, there is a cooperation within the partnership. Okay, that's why no matter how the concerning partnership profit or loss should be allocated. And then other than that, we should discuss on those items. Okay, for the rent. Okay, this item that is being paid to one of the corporate partners, super limiters. But looking at this amount, okay, and you will find that basically, and no problem, because there is not a related person. Okay, it's paid to another company, although this is corporate partners of the company. But be careful, the remaining portion, that's mean originally the total is 300,000, right? But 200 is the rent, and then the 100,000 is for deposit, and that is refundable. That's why that should not be included in the income statement as expenses. Okay, that's why this $100,000 of the deposit should be added back. Okay, then about the company depreciation amount, statutory depreciation amount is $200,000. That should be allowed to deduct. And also one of the partner elect personal assessment. Because of that, and we need to have the profit or loss allocation to each of the partner. Okay, now we look at how to adjust these figures first. Okay, these figures. We'll start with the net profit and loss per account, similar to the profit tax computations. Okay, that's why we'll start with the net loss of the income statement submitted by the partnership, and then we will add back the depreciation, that is accounting calculation approach, and then all the wages should be added back, and then one more is the loan interest, and that is paid to Mr. Ng and Super Limited, and that should be added back. Other than that, and this withdrawal of goods is not an expense, should be also added back. And then the deposit refundable, and also this amount is not allowed to deduct, also should be added back. And then there is a statutory depreciation allowance allowed to deduct. That's why you deduct these figures. Finally, the loss have been reduced a great extent, just 20,000 only. Now, then we will start with the partnership profit tax allocation. Okay, because there is a change of the partners, and also the new partner join the company is half of the years. That means the old partner will be still in the partnership for half a years, and the other join. Okay, that's why we'll split the period into 2 periods. And that's why each of the period will account for half of the amount of the loss. Okay, that's why starting from the very beginning, you should determine these 2 periods, how much of the adjusted loss that will be allocated. And because of that, half of the amount, that will be 10,000. Okay, after that, we will construct the table to work out how much will be allocated to each of the partners. Okay, and originally, the first 6 months, we will have our super limited. Okay, then about their salary, and then their interest we put down, that is being provided, and the drawing. And then after that, we have identified that is the amount being allocated to this period of the time, right? Okay, that is come from here. Okay, okay, that's why we can work out the figures. Okay, and that's why we need to adjust. Okay, this balance figures. That is the balance figures. Okay, that's why this two, okay, this three add up together, and then compared with this one, we will have a balance required to allocate to each of the partner according to the ratio 1 to 2 to 2. Okay, then we will allocate the figures to them, and afterward we find that one of the partner are being allocated profit, the other two are being allocated loss. Now that require a reallocation. And then for the reallocation, that will not based on the original allocation ratio. That will be based on the proportion of the amount. Okay, because of that, we need to allocate this 29,500 to the other two. Okay, and because of that, we will based on this ratio. Okay, that will be the 1,500 to 38,000. Okay, and then that will free to 76 to allocate this 29,500. And finally, and you will find that Mr. Out will be allocated 1,120, and then Super Limited will be allocated 28,380, and then add them up. Finally, and there is no partner are being allocated profit, and the other are being allocated loss. Okay, that's why finally we can find that Mr. Out are being allocated a loss 380. None for the Mr. And then Super Limited that will be allocated 9,620 loss. Okay, that will be the first period. Second period, same. That will be allocated at 10,000. We will put all the concerning information from the figures about their salary to the table calculations. Mr. The salary allowed, and you should divide it by half. Okay, Mr. Okay, original for the whole year is 90,000. That's why we have 45,000. Okay, and that will be 45. Okay, and then the interest. Interest are also required to divide it by half. Okay, interest. Okay, 75,000. Okay, 37,500. Same for this part. Okay, you should divide the concerning figure by half. Okay, then after that, and also the super limited, the interest amount should also divided by half. Okay, 30,000. Okay, divided by half, 15 here, 15 here. Okay, then we have those figures, and then this is the allocation portion, and that is the big balance figures. Okay, we work out the balance figure, and then we are required to reallocate. Why? First of all, we allocate this one according to the ratio 1 to 2 to 2. We allocate these figures and then to the three partnership three partners. Okay, we finally we find that two partners are being allocated profit and super limited are being allocated a loss. Now that won't be allowed, and that's why we are required to reallocate. When we have reallocation, then it will be based on these two proportion, okay, to allocate this 40,000. That's why according to that, we can work out the new ratio right here. Okay, I use it similar to this one, write out the reallocation ratio clearly. Okay, and then that will be the figures. We will allocate this amount to no need to write out the ratio, sorry, because the figure we will put all this figure to super limiters, because super limiter have a allocate of loss 40,000. Just these two have a profit being allocated. The whole amount will be used to set off. Okay, that's why no need to have the ratio. Okay, because of that, you will find that the whole amount 30,000 will put into super limited. Finally, new for Andy new for and what left behind is just super limited allocation of the loss. And also, according to the question, Mr. Ao, okay, will left the company. Okay, that's why you will find that if in case Mr. Ao doesn't elect personal assessment, this $380 will be left. Okay, uh, and for super limited and being allocated the partnership loss for a corporation that is more flexible, and super limited can make use of these figures to set off the other profit from the other source of the business. And that's why we can show that finally there is new accessible profit in the partnership under the partnership company, because this figure will be used by the super limited, being transferred to calculation super limited profit tax liabilities, and this figure will be left. Okay, and then for the part B, and is asking you to discuss on two items. One is the Mr. Ao, okay, about these figures, how to make use of the tax benefit. That's why in order to make use of this laws, theoretically Mr. Ao should elect personal assessment, but as Mr. Ao doesn't have any uh, income in this year, and that's why most likely this profit, this loss, cannot be used in this year. But if in case Mr. Ao, okay, elect personal assessment, then this loss can be carried forward for the next year. If in case next year Mr. Ao have other source of the income, then he should elect personal assessment again. Then he can make use of this $380 to set off the other income. Okay, that's why it is recommended that Mr. Ao should elect personal assessment in this year in order to make use of this amount in the coming year. If in case he have any other income, then that can reduce his tax liabilities. Okay, then another one that will be about Mr. Okay, but Mr. By looking at that, it doesn't have any. Okay, and because of that, uh, similar thing. Okay, if he doesn't elect the personal assessment, he cannot carry forward any profit or loss to the next year uh, to set off the future benefit or future profit from the other business of the other source. Okay, but this year doesn't have any. Okay, and uh, uh, we need to identify whether Mr. Have any other source of the income in this year. Okay, but no matter how, uh, there is no accessible profit being allocated from the partnership. That's why Mr. Okay, doesn't enjoy any benefit of this. Okay, you just discuss all those things. Okay, related to the personal assessment, how this is being benefit to the taxpayer that can be carried forward if in case there is an allocation of the loss for the concerning partners. Okay, and that will be the answer for this question 1 and 3. Okay, and if you have any questions, you may ask me in the chat room.